Fire in. Now fire out. What's up, people? It's Blaze Flama. Finally, I'm back making another video as I promised. As I told you, that will do. Look, let me adjust my webcam a little bit. That will do another video. This one will be talking about AMT. Okay. Wait a minute. I'm in OBS now. Let me head to the charts. Okay. So what you're seeing now, well, what you've been seeing from the beginning is the charts. I already made a video about MTT, the software, the open source software that's for crypto for a moment, when you can trade Oracle, when you can practice what it is. Okay, so it's a good thing. If you wanna pay for premium software for softwares that has Oracle, well, this is a good moment. This is a good option to not pay for them and still practice. Okay. So in the last video I made about order flow, I talked about the concepts a little bit. In general, I didn't specify, or I didn't go deeper, and I just showed you what was a platform for and that you could use it. But today, I'm going to talk about one of the main things that you need to take in order flow. It doesn't have to be footprint. We talk about heat map. I heat map to talk more because what I did was just to show you a little bit what it was and the indicator. But in general, the indicators that MTT had. This video is actually not going to be, in general, it's going to be more about focused about AMTT. Okay. So if you want to become a better trader, if you want to be someone who knows the context and the structure of the markets, this is actually for you. Okay, so today I'm going to discover, well, you're going to discover for me, what is AMT. Okay, so I'm gonna take this out. No, this one, this out, and I'm just to put the normal one. Okay, doesn't matter. Well, actually, no, you need Boolean profile. Sorry, this is actually related to Boolean profile. Wait, I cannot change the colors of the chart. I would like to, okay, maybe. I can draw here. Good. Okay, so what is AMT? So AMT stands for auction market theory. Okay, that's what it means. Let me just like here, okay. AMT capital. This is auction market theory. Okay, this is what it means. Can I expand this a little bit? No. Okay. This is what it means. AMT, auction market theory. So what is the meaning of what is AMT? Okay, so as you know, the charts on when you trade, in this case when you're trading, you look for structure. You know how price is moving. And the thing is, the markets move in three ways. This is not ICT, this is not ICT concept. As you may know, the power free, which I use, it's not a false thing. Actually, it's actually true. Which is accumulation or accumulation, manipulation, price manipulates and then distributes. Okay, so power free will be, oh yeah, price is accumulating. It does a little bit of manipulation and then it distributes. That will be power free. It will be accumulation, manipulation, distribution. It will be AMD actually, the power free with AMD. So it's not like that. It's actually related to it, but AMT basically is about what price is doing. Okay, so how can I make it actually? I'm gonna start with this. So we know that price moves in a certain levels, okay, certain ranges. The first thing is that price has balances and imbalances. It means that price is either doing one of those two things. I don't think that was fair value. I think not fair value gap, but it's actually related to fair value. It is imbalance, okay, and balances. I should have made withdraw something, to make it more interactive. So price moves within these two levels. Okay, there's actually one more, but we're gonna focus on this one because this one is what actually matters. And why do I have a volume profile then, if this is only about imbalances and balances? Well, it's related, because volume profile makes you the range of that moment. As you know, volume profile, this one is a daily one, so it will target me from the beginning of one day until the end. And this whole movement of volume profile, you got the range, you got the PO point of control, you got volume high, volume low, you got also the volume low node, low node volume, I think it was, and high volume node. But it's actually rated, because with imbalances, for example, this movement right here, no, this one will be an imbalance. Why? Because price is not fair for any of the people. What it means to be fair price? As you know, fair, it means it's equal, so it's good for both sides. In markets, in trading, we only got two people. I'm not counting brokers, okay? The brokers are only they are systems, or like the arbitrage, the middleman. You just take them as a middleman. Where what they're doing is just that they are connecting the seller with a buyer, but that actually mean two people in the markets. You want to buy something, well, you need someone to sell you something. If you want to sell something, you need someone to buy for you, okay? Like a marketplace, when you're selling something. Vinted, Amazon, when you're selling something, you just need someone to buy it from you. So the same with the markets, okay? And why is it fair price? Okay. So fair price means that when there's a range in the balance, is fair price. Why? Look at this range, for example. Look at this moment. What do we see here? We see that this will be a balance situation. The market is in a balance when the range is in a balance moment. Why? It's a balance phase. Because price is cheap, so you can buy, and that's interesting for buyers. They want price to be cheap as much as possible in the discount level in order to make buys. All this level would be interesting for sellers because they want price to be as much as possible to sell. Okay? That is a good thing. That will be fair price. I mean, it's fair for both people. For buyers, for sellers. Okay, just let me check a moment if I'm doing good. Good. That's a fair price. Fair price is only at balance. When you see this movement here, it means we are in an imbalance. Look how it's out of the range, although it's inside of volume profile, of the daily volume profile, but the range of the volume profile inside of the VAH and VAL, it's out. It's an acceptance. As I told you before, there are only rejectance and acceptance. And then in the middle of this accumulation, there could be a little movements, but you always track for acceptance and rejection. In this case, an acceptance of what? Of the range. So market is creating an imbalance, and then it will balance again. It will make another imbalance, and it will balance again. Those are the only phases you want. But fair price, you will only find it inside of the balance. Of the balance. When you get an imbalance here, okay, guess what? It could be for both sides, for downtrend and uptrend. In uptrend, you do not get a fair price. Why? Because it only favors one side. It's simple. When there's an acceptance, there's not going to be a lot of sellers. There will be sellers, but there will be more buyers than sellers. That's why this price is acting this way. It's an imbalance. That's why when you get a fair value gap like this one, there's no gap in this what? Fair value. Well, this actual fair value will be around the range, but you know what I mean. That's why sometimes it doesn't get liquidated. It will. It means the price will go in and take the orders that weren't filled. That's why when people say this is not filled, this is what they mean. At a moment of fair value, they were not filled. And liquidity, buyers and sellers want to take that liquidity because they know it's a good aiming. Okay. So this is how price moves. There's a balance moment inside the range of the volume profile, where in this case, buyers were what? or more interested in buying in this price. But look, this is a good example. There is a balance moment. Look at the imbalance. Each one is not a little much, but look at this imbalance. I mean, this is Bitcoin, so balance again. Price balance is structured, and imbalance is again not that much, but imbalance again. And the same thing, and it's the same thing again and again and again. That's why I told you, when you have bone profile, you can see it clearly. If I took this out, okay, it will be not much clear to see. I mean, yeah, you will see this movement. Guess what? Oh, price was, a balanced price. There was a fair price for sellers and as well for buyers. But look at this movement. This is an acceptance, simple acceptance. There was no fair value here. There's nothing, because there were more buyers than sellers. Now price goes into a what? Again, a balance. It could be an imbalance, this one, but that's why you need bone profile. Okay, bone profile tells you everything. You get the ranges. So this is what you do. When you get the range, now you have all the structure you need, and then you will go for the context. But that will be in a video. That will be with a footprint more deeper. That's how you can get with a footprint you can get even more data. Okay, but it's needed. Look at this, how it's needed. This is how I actually trade. I trade acceptance or rejection, and you saw it today. Well, I saw it today. You're gonna see it today. I'm gonna make later the stream and a video of my trade. And you saw it what? You saw it before. Yesterday, I traded what? A limit sell. I was waiting for a rejectance, and I got burned because it was an acceptance. But that's another topic. But it's related. So you can see that price is what? Looking always for a range where it could be a fair value. That is what buyers and sellers want, fair value. That's why most of my trades are rejectants, because most of the time price wants to stay in a range inside of it. Why? Because you can connect the buyers with the sellers. When you go out of a balance and you're in imbalance, there is no fair value, because it only favors one of the sides. Okay, let me get a clear one. This one, now with the downtrend, we just went from a range. Fair value in this case, well, you could tell it's an acceptance, but kind of rejection, because it ends up going back, not that much. And then another balance. This is what it does. You got one bone profile, another range, and then another imbalance, and then another balance. This is what happens as always. Boom, boom, boom. Balance, imbalance, balance, imbalance, and balance again. Like bouncing, But this is what price does, because what you want is to connect with the other side. If you're a buyer, you want a seller. If you're a seller, you want a buyer. With bone profile, you can get this. If I take it out, it's difficult to see. But when you have it, you have everything. You can see the range. You can see the point of control. You can see what's happening with a footprint chart. You will also see the data. You will see the context, not just the structure. This is the structure you get. This with the AMT with the AMD power of control, accumulation, multiplication, distribution. You're gonna be broken, man. You're gonna flame the markets with this one. Of course, as much as possible, you need to have more data, but this is a good way to know the structure. Okay, you can see it. This is how price moves. There's a balance and there's an imbalance. Inside of a balance, there's a fair value. Simple. There's not much needed. You have that. Also depends on what you want to trade. I mean, there are people that trade more in acceptance than in balance. For me, both are good, but it just depends on you. It depends on you. If you're gonna be a trader that trades only acceptance, good. Or acceptance or downtrend, good. If you only trade rejection, which is more of my kind, where I'm at now, although I trade both, I can trade both, it's also good as well. The rejection happens more often than acceptance, but I add up. Simple as that. But that's why you need the context. You need to know what's going on, and it's good. So this is a bone profile daily. Now let's get to 5 minutes. How do you get this? This one, what it is? This one is yeah. Okay, the bone profit is still the same. Now you look at this, same. It was clear what is actually the same. Yeah. Price. Look. So the range. Well, it goes a little bit. There's an acceptance, but it ends up going back, and the same rejects, and again rejects. That's why you need this range. You may have the bone profile vol. This could be volume low, high volume node, because at the end, well, it's now inside of the range, it's an acceptance, but then it goes back. This is a rejectance. Yeah, of course it goes out a little bit, but it ends up going back to the chart, to the range inside of balance moment. Imbalance again, and it creates a new profile because this is the next day. This is another day, and it's the same. The range rejects, goes. Well, this is actually, yeah, the low. This is the low. Price rejects perfectly, then it goes up, and here it creates the volume H area high, and now price, I could say that this is an acceptance, and imbalance again, balance again, and again it will balance, and again it will balance, and again imbalance. So it's the same thing as a loop. That's how market moves. That's why you need a not context. Well, you need it, but first you need the structure. How is the market structure? What am I looking at? I'm looking for premium levels. Am I looking for discount levels? This is what you need also as well. The equilibrium. Told you. So I don't have it. I'm just gonna make it raw. You know, you got what, a premium level? Oh no, this one's not. No one I like. If I was in trading view, okay, I could show it to you, but I mean, okay, no, there's not. Okay, yeah, you got premium level, and if you don't want to have level because you say, okay, I don't need that. Okay, good, then you just can trade with discount. Okay, but it's the same thing. It's the same thing. If you end up taking all this, it means you're saying, okay, what do you want to trade? Would you rather trade premium and then looking for a rejection and aiming for the discount, aiming for a VAL inside of the range, or you're looking for an acceptance here and looking for an imbalance, trading an imbalance, trading an acceptance, or trading again a rejection of a discount, because now it's what you can make a buy here, a long position, wait for the rejection of price when your limit buy hits, and then what, you aim for the VAH, you aim for premium levels. It's the same thing. Price moves inside this range, inside the balance, because it's this fair value. You got people who's willing to buy. You got people who's willing to buy at this level, people who are willing to sell when it reaches this level, and the same thing. And if there's an acceptance because price has failed to reject, let's say now it's making this an imbalance, don't worry, it will make a new one. It will make a new balance, and the same, it will trade. Okay, now it fails to accept, and it rejects perfectly. So now it goes up. Now it could reject, but it fails to reject, and there's an acceptance. And guess what? Price ends up being in the same range again. This is how price moves. This is how price moves. It will end up taking liquidity sooner or later. That's how you need to understand the markets, the finance market. Okay, there's a balance level where there is a bit fair value, look good for buyers, good for sellers. You're in the middle as well. You can do whatever you want. You can sell, buy. But this is the structure you need, and that you get that with the volume profile to mark your range, and with equilibrium as well. Point of control for me will be point of control is just tells you the volume of the trades that's happening. This is where the time where most trades had happened. Okay, what time is it? Okay, got it. I know it sounds like a Chinese storytelling. It's complicated to understand when you're a new one, because of course, for me to be an order flow trader, where I trade this concept and then go into quant, you cannot jump right into it without being a normal trader. Well, a beginner trader. which are the charts. So I understand it's complicated, but it's a good thing. Truly, it's a concept that you need because you can actually learn so much from this. This will get you the structure, and then we'll jump to the context. Okay, so for the next video, people, I'm going to show you more about footprint, although the last video I made about order flow was more into footprint, and although in general was about more indicators and concept of order flow in general. But today it was about AMT, how prices move, option market theory. You can combine it with equilibrium, you can combine it with AMD, accumulation, manipulation, distribution, and then trade, and of that you can trade rejection and acceptance, because price will always end up doing the same thing. Okay, it will reject or accept, it will reject or accept. If it does, don't worry, a new range will be made of the bone profile, and you will be still in the same rate, in a different range. And if it goes out again in an uptrend or downtrend, it will continue. It will make a new range, it will make a new balance, and again will balance again, and will make a new what? Balanced range. So it doesn't matter what trend does. What you need is a structure, because you will see clearly. You know, if I take it all out, the bone profile, it's hard to know where price is going. Oh yeah, price is rejecting from this level. Yeah, well, but with a bone profile, you can see the range, and it's more accurate. You know, if you're just a trader who trades bone profile, inside of the order flow concept, it's still a good thing, you know, because it will tell you the structure, it will tell you what's happening, and that's a good thing. People, truly grateful, truly thankful, because this is being a good journey. I'm learning as much as well with you, and the more I teach these things, the more I apply to my mindset, and it will be better because I'm practicing even more. So truly, you want to make the jump, truly make it. I'm not saying you're gonna make it with trend lines, although I'm not a big fan of it, but I mean, if you're consistent, that's the data for you. I'm not saying that you can make it with ICT or any strategy, TGRs, although, well, you know, I'm not saying that. I'm actually saying it's possible. But actually, if you want to make better entries, have more confirmation, you need order flow. You need data, level data. And I'm not being a quant. I mean, being a quant is another level. You can do this, pay software, watch videos, practice, and you will be better. Again, as I told you, I'm building an algorithm based on order flow. I made algorithms and bots with price concept and different strategies, also my strategy. But order flow is another level. Imagine not just you trading, but an algo that will make it for you and has data, because that's what you need. You need data. Okay, so fire out. Truly been a pleasure. Keep flaming. Blaze this out. See you in the next video.